Of this volatility and what happened last week and all the stocks, the shorting and everything that went on in that whole game is going to have an effect on the broad market short term. It's going to have effect on investor sentiment in the short term because we all realized that it seemed pretty easy to affect the market that way. And of course, that's going to make people jittery. We were already pretty vulnerable to a pullback. Everybody had been talking about valuations being frothy and were we in a bubble? I even read something recently that said there was a bubble in the bubble talk. So I think we were fragile in that sense, and we got a little bit of a pullback. I mean, it wasn't really anything dramatic, broadly speaking, but then what you saw was that there was buying opportunity in that pullback because we're still headed for better things on the other side of this. So investors came back in and bought up at a better price than they could have before in some of the other places in the market.
David, what is the lesson of last week for retail investors?
Well, I think the lesson is going to be learned over the course of the next week when a lot of retail investors take losses on the positions that they took on speculation. And the reason why they're going to have those losses is because the companies that they ultimately bet on did not have fundamentally good business models in some cases. And as a result of that, these stocks achieved valuations that were far too high. And that's really just the trader's market. And for more sophisticated traders, you can make money doing that. But for retail traders, you can't. And that's the first lesson. The second lesson, I think, is that the information advantage that's out there is really diminished. With all of the information about shorting and about short positions, it is certainly possible to take millions of investors who are just moving $1,000 or $2,000 a piece and actually change market conditions. And I think that lesson for professional investors is going to be well learned. Usually we see individual stocks that are moved that much. But in this case, we saw 50 stocks that had large moves, tens of billions of dollars in actual activity in the marketplace on the short side and covering. And for me, that's going to be the lesson of this particular period. But for fundamental investors, this is an anomaly and actually should be looked upon as a buying opportunity in the event that the correspondingly liquid shares become available. And that's sort of what I would take away from this past week.
Shepard Smith here. Thanks for watching CNBC on YouTube.